Alright, so here is the recording of the trade that I was looking at, and just want to make sure the recording is going, everything's good. So, yeah, this is going to be a 30-minute video, and I hope this uploads in the proper format that I expect it to. But we are just going to be going over all of the trades today, so I have notes pulled up. I'm going to be referring to these. You'll probably hear mouse clicks. That is not on mistake. So, while this kind of pans out, you can see that there's a few trades here. And initially I wanted to get filled at that 5-minute bullish fair value gap in the form of a buy-side imbalance, sell-side inefficiency, formed at 1240. So what it's trading into right now is where I had wanted to initially be filled right after it formed. So that would be at 1241. If you go to that candle, you can see that candle did not trade into the high. So I tried to get filled long there, and it just didn't pan out. It didn't fill the limit order that I had placed. And then we traded higher up into that daily fair value gap, BISI volume imbalance from the daily chart. It was on the June 3rd, 2025 candle. So the idea of the first few trades that were going short, it was 3 trades going short. The idea was to sort of capitalize off the move and anticipating a return back into the gap, and then eventually resume higher. So even though I was bullish for the day, I was just trying to get a counter trend move. But looking back, I did rush the entries, and it's not really ideal from a market efficiency paradigm perspective. If you go back to core content, month 1 sort of kind of touches or brushes upon the idea that, obviously buy low and sell high. And so, I would want to be buying on down close candles and selling on up close. But when we were trading lower, it didn't do so, or I didn't do so, and so hence the stop was poorly placed, and I was stopped out. So that was the first trade that I just finished recapping. Then, second trade, I'm going long based off of the reaction from the weekly first presented fair value gap. So this is a 1-minute candle that it's anchored to, but it's used throughout the entire week of trading, and this is from last week. Then I was shortly stopped out within 2 minutes in respect to the 12:50 to 1:10 p.m. macro. So that would, that kind of set the stage for spooling the liquidity trading higher. And so third trade, that was another short. So attempting to go short once more to capitalize on the movement of the 5-minute fair value gap at 12:40 p.m. Things begin to speed up, and I'm getting lost with all the annotations on the chart, having to manage other things outside of trading simultaneously, but trading what I visually see on a 1-minute and 15-second chart, playing pinball volatility. So I'll get into that in a second. But at this point in the trade, you'll notice I also start to finesse some limit and stop placements from my desktop, trying to be more efficient. But at 12:53 p.m., the algo trades back into the 1-minute fair value gap. 12:48 p.m., bearish fair value gap, used as a premium array to allow for short entry once more, effectively stopping me out my position. But with no hesitation, I immediately re-enter next trade at a better price using the stop run / repricing in my favor. All right, and so those were the first 3 trades that we're losing. And, there was one more trade in between all of that talking where I went long. And so after re-entering, I didn't go long. I went short one last time. And this one I cut early before it began running higher. So I got feedback from that trade. Anyways, I'm just going to now begin talking about what's going on in the screen right now. So it is 12:20. On my phone, but actually that was taken at 1:20. And so I feel like this is kind of all over the place. But next trade here, unfortunately, nope, that's not it. Wrong note. I also have my AC off and now I'm sweating my butt off. Alright, so yeah. This trade right now that you see, as you can see, I'm trailing the stop orders as we kind of press higher with each new high made. So, kind of anticipating a return back into that 4-hour first presentation gap. You can see right there. And so, essentially, the framework for that trade was at the daily fair value gap from June 3rd. It was the framework built on the high of that imbalance. And so, yeah, the highlight of this trade was basically just trailing the stop tighter and tighter as a means of reducing risk each time price is trading higher or creating a new high. I really like the technique I used because it allows me to lock in more and more portions of a trade while still remaining in the trade. But with enough experience, this becomes like second nature. So it was a little new to me, but my stop placement was still A1, A2, I would say. That's just kind of a play on words. If you know, you know. Anyways, next trade here was placed at 128, and then I was failed immediately 2 minutes later. And so next trade here, it's actually out of frame unfortunately, but you can see at the top of the screen, the pre-planning kind of, you can see like also at the bottom of the screen how it gives you the notification. So all of this is being done from my desktop. That's why I'm not closing those notifications. But I will pan back into the proper frame shortly. But stop limit entry was at 648.75 and stop was at 60.43.75. So at this point, I did believe price is going to continue its directional move upward and start to use the old 1-minute PD arrays I have marked from last week as a means of support. So this kind of just reminds me of the analogy from ICT of a rock climber. I think it was from 2024 mentorship. But eventually you can see my limit exit was placed at 60.59.50 and the market trades up there in 2 minutes and 9 seconds. So just waiting for this to waiting for me in the past to start, to come back into frame here or put it back into frame. And yeah, so at least now I get to take a second to breathe. But yeah, there was some trades placed here. You can just kind of look at it at the bottom. I wish I could have done a better job. But, after taking what, 18 trades, I think it is. Yeah, 18 trades, and logging all of them throughout the entirety of the day, and hitting a heavy push workout today. I'm kind of done for the day, so it's about 1:40 Central Standard Time, so 2:40 Eastern, and I am ready to clock out and, I don't know, go to sleep, hopefully. So while we pan back into frame here, I'm just kind of... Oh yeah, I'll talk about those notifications. So I did set up a shortcut on my phone for the for sort of a focus mode. So you'll see now that, like, basically as soon as the recording starts, it will say like trading status or focus mode, whatever it's called. It turns on. So it's a shortcut that I set up. Basically, just it disables all my notifications, except for Twitter, which I only have like 2 or 3 people enabled on Twitter, and my Telegram notifications, and I have temporarily turned on Truth Social notifications. And yeah, another thing is, sometimes in the past there has been cuts in the recording, and even in today's recordings there was also a cut. It's because when I receive a call, for some reason Apple thinks it's just a smart idea to cut the recording and just override it with the call, but I don't really like that, so I need to figure out how to turn that off. And until I figure out, there's going to be some cuts in the recording. Also, sometimes I just have a habit of clicking the power off button on my phone, and so the recording also gets cut. So sometimes I also do forget to even record, so that's also few reasons. Well, there is some inconsistencies in the recordings, but other than that, I do try to record every trade, not only for the YouTube, but for mostly myself, so that I can go back into them and, study the price action that was given on that day. And at this point, we are just marking time. It is 12:54. Just going to make sure the recording is still going. Perfect. I hope my mic is okay. So it is 12:55 on the phone, and I'm actually going to change that to New York time now. I'm done with Central Standard Time, man. It's so 1 hour ago. Get it? Anyways, technically it's 1:57. Yeah, 1:57, and we still have not panned back to... There we go. Okay. Alright, so yeah, this trade, 60 and a quarter. So you can see here that, I have a decent entry, and stop is placed right above the high of that that blue inefficiency shaded. There's no labeling for that, but that is from last week. And so I'm working inside of these gradients right now. These are the gradients from the FOMC meeting. And so those inefficiencies are the same inefficiencies from that FOMC day. So essentially, what my stop is communicating to me here is that, well, first let me talk about my limit order. I'm pretty confident here that the limit order is going to get filled. Yeah. But pretty confident that the limit order is going to get filled. And so it's just a matter of, how I position myself for this trade. and you'll see why I say that, but basically, so yeah, the stop was placed at 60.55, where actually I'm also now noticing that the stop is a 5.25 handle stop beneath the entry. So kind of just shed some light on an improvement I can make on my mobile trading, that if I could just automate the stop loss placement of my orders, so right when I enter, the stop goes 5 handles beneath or above the entry, that would allow me, well, in this scenario below, but that would allow me to focus on price a lot more. And so, oh, there we go. I'm drawing out swing projections to see, how far this thing can really trade. The swing projections did not go far enough, but what I was looking for was the -6 standard deviation and where it fell. And so -6 is like the high end of a expansion for me. And just based on the climate that we were in, where Iran and the US started just going back and forth, it just spoke to me, and I had been watching that Buyside since last week, since FOMC, so I was really just dialed in on that Buyside. I wanted to see that Buyside booked, and I spoke about it in my Discord, but that is all in the Discord. Anyways, here I'm just going over, trying to do a quick recap, which now I'm realizing was absolutely useless. I'm trying to be ICT, but I feel like this recording was lackluster. Like me doing the voiceover. Once again, it's just the comfortability of being on camera for me, or not camera. I don't know. And in private, I feel much more free and open, and I guess I just have to get that same ability when speaking for the YouTube. But also, I'm just super, super exhausted. If I sound tired, it's because I kind of am. So, it is now 2:19 Eastern Time. So I'm about to take a long here, and you'll see how, based on the 1 minute first presentation Trevally Gap SIBI at 2:02 p.m. from 6/18/25, so June 18th, that I entered a long, once again expecting for the buy side to be taken out above 60.69, but it just happened so that the market was chopping around and did not run that buy side at the time I wanted it to. Instead, it went a little lower below that first presentation gap and presented the forever model that ICT spoke about in one of his recent spaces. So that was interesting to see, but I did cut the trade early, attempting to go long one more time at a better sort of time, but just not a good entry. I would love to provide a more hopeful journal entry, but I am so gassed. Anyways, that trade recording did get cut, so here it is. We are it kind of just cut, but still the same trade. Entry is at 60.68, stops at 60.63, and you see that orange little gap is what I was watching And I really liked my stop in this position because I was watching that orange gap thinking that if it does trade all the way down there, I'd want to see it act as heavy support. So I'd want it to just trade down to the high and bounce off of that and then resume higher, but it did not do so. But this is post the forever model presentation, if that makes sense. Makes sense to me. This is probably one of the worst recordings I've done, but it is my first time also doing a voiceover, so for like such a long recording. There it is. So that reaction really had me convinced that we were going to bounce off that inversion and then trade higher, but it did not do so. But regardless, it's a small loss for a big win. And so now I'm actually just going to scratch my notes because I think the notes are just honestly making me even more confused because I have to pan through a bunch of different pages. So I'm just going to close all of these and speak from the heart, baby. Yeah, so trading at the first presentation, weekly fair value gap from 608. So that's June 6th or June 8th. Anyways, those equal lows, it goes down, stabs that, and then trades into the stop. So watch how it just melts lower. Anyways, some takeaways from today's trading was the market did present multiple opportunities for me to scale out the positions that turned into eventual losing trades, but I'm really not beating myself up over this because I am trading a 1 minute, and there it cuts right there again. I think that's when I got the call. Or no, I cut the recording there actually. That one I cut the recording. Previously I got the call. Anyways, you can see that it does run lower below my stop at 60.63 and then trades to the lower quadrant of that non-farm payroll wick that I was looking at on Wednesday of last week. And I go long one more time on the premise of an order block below that inversion fair value gap in the lower quadrant, and it starts to give feedback, once again aiming for that 60.81 buy side. This is exactly what I was talking about, is that in the initial voiceovers that I posted today, that this was like a growing pain for me, that even though I knew that the buy side was there and we were really likely to go up into it, I've seen this happen so many times where the market on close or the final hour will sort of pan out beautifully and run a objective, but I either I didn't trade it and I just tape read it, and which I'm not even upset about because it gave me experience to sort of understand those situations. But now that I'm starting to trade these things, there's some growth. This is 18 handles of room that I'm trying to see for this trade to pan out, and so I'm kind of, if I'm being honest, I was a little uncomfortable here, but not in the sense that I was really thinking to myself that, oh, this isn't going to pan out. It was a matter of time. It was the time that it took to pan out. And so while I can't, speak off the top of my head for which space it was, but this is a graduated understanding, and these are sort of markers in my learning or my journey where they're just growing pains. You know, I went from really not knowing how to read price at all to slowly, basically the same journey that we're all on to understand how to read price, then calling moves, week by week, month by month, whatever, then daily where I'm seeing 5 handle moves pan out. And then occasionally, I'll see larger time frame or like higher time frame moves pan out, and I'm seeing it daily. I'm seeing, small moves, big moves, large moves. I'm seeing different markets. And so, now I'm at the point where, yes, I prefer an ends model, honestly, but I'm just trying to capitalize on what the market is giving me. So even though that we had that 6081 buy side, I still wanted to lower the limit order just because I was starting to be a little uncomfortable, and I couldn't I guess I just couldn't bear it really, so I just kind of lowered it. And even though I lowered the limit order by a great deal, I'm still going outside of my comfortable space. And so targeting 7 handles here, putting the stop to break even, just because if it does trade down there, I can exit the position completely risk free. But now we are approaching the final hour or final 15 minutes of trading, where I'm just gonna let this pan out. That's it. I'm not gonna exit early. I'm not gonna try to do anything crazy. I'm just gonna let it pan out. If it wants to run my stop at break even, then you know what? That's what I had to do. And if it wants to go up into that limit order at 60, 71, 50, then that's what it's gonna do. So I favored the buy side, obviously. And so now we're starting to see that volatility kick in at 250. There it is. So last 10 minutes of I keep looking at the time above, but it's actually 350. So I meant 350, not 250. All right, so 9 minutes till the closing. I'd like to see that 60, 81, 25 buy side. So trying to just shed some light on that. That is completely where my focus is. I don't think we're going to go any lower. I am all in on that buy side, right? I am so, what's the word? So confident that buy side is going to get hit, because I had been watching it from Wednesday. Anyways, trying to get in on that movement, capitalizing on the 15-second chart and running up into that buy side. But you can see I did enter a little early. So yeah, here you can see I did enter a little bit early, but I am expecting a whipsaw up into that 60, 81, 25. And the reason I placed my limit order at 60, 82 is based off the swing projections, but we did overlap to the downside of that gap that I highlighted, and then came back up, created a volume imbalance in the upper quadrant. It respects it. Market starts to whipsaw higher, just like I expected. And so I moved my stop to break even or better, just in case the market wants to sort of make its way down yonder to accumulate more. But eventually it didn't trade to 60.82, so I just cut it short. And yeah, so thank you for watching. It is a black screen now, but that's because I want to just make a closing statement before I exit this and upload it. That 60.82 buy side was based off of the swing projection that I showed you on this recording, from that low of the daily fair value gap imbalance low. So that was the I think it was the -6 standard deviation was at, or -5.5 standard deviation was at 6082.75. So I was just setting it at 6082, but the market just traded into the 6081.25 buy side, and so I didn't want to risk holding into the close. But the market did eventually trade higher into that level, 6082, only after the 6 p.m. restart. So pretty nice day for me. A lot of growth, a lot of growing pain, I guess. And I think this was a graduated understanding, or a graduation day for me. So, but yeah, I just wanted to get this out here and kind of, although this is not how it didn't come out how I exactly wanted it to, but I know that over time, if I just keep doing, it's the same thing as trading. If you keep doing it, you keep taking notes, you're gonna improve if you have the mindset of improvement. And that's the same thing how it is with this content creation. The more I do it, the better I'll get. So I do hope you enjoy. And yeah, have a great rest of your day. We do have a crazy week ahead with all the news. The economic calendar, yes, but the geopolitical stuff going on. There's supposedly a ceasefire, but the way I see it, today we had a lot of theater go on, and I don't really expect this to be the end. So I'd be on a extreme close watch, and I'd, just like ICT puts it, it's not a time to be full leverage. So one contract trading, lowest, I guess actually a better way to put it is just be nimble. And at any time I am completely aware, till the climate gets better, that we could have one single tweet come out from anyone really. And so from mostly Trump, we could have one tweet come out and it creates an insane amount of volatility. One decision made and you can get whipsawed extremely against your position. And I am just trying to shed some light on that for myself, because I am aware of the risks of trading, and I've had it happen to me before, and I don't want to be in that position. So, although you can't run from it, you can sort of stay away from it, right? That's probably a good way to end this.